So the next chapter will start, which is about NPA, or it is called IRAC norms and provisioning. IRAC is income recognition and asset classification norms. Okay, so income recognition and asset classification norm. So how the assets of the bank, especially it is about the loans and investment also. Investment can be also NPA, but mainly we are talking about the loans. So how these loan assets are classified. So as per the health of the assets, we will classify that, and according to that classification, the income from those assets should be recognized. So that's why it is called IRAC norms, income recognition and asset classification norms. Okay, so these IRAC norms are provisioning for assets was introduced in the banking system in India from 1st April 1992. After the recommendation of Narasimhan Committee. So Narasimhan Committee recommended that we should have these norms and all banks should start provisioning. So provisioning means you have to set aside some part of money as provision for those assets. So for good assets or standard asset, very less amount of provisioning is required. But when the asset is turning to NPA, then the provisioning will be increasing gradually. So that is the procedure. So that means prior to this period, prior to 1st April 92, there was no concept of this IRAC norms or provisioning. That means the NPA concept was not there in the banking system. At least in India, this concept was not there. So first time it was introduced from 1st April 1992 only. So question might be asked, before this introduction of IRAC norms or provisioning norms from this 1992 April, what systems were followed? What were the systems followed? So it might be asked, who introduced, on whose recommendation these IRAC norms are introduced in India? So you can say it is according to the Narasimhan Committee recommendation. These norms were introduced from 1st April 92. That is first thing. Second thing, sometimes questions comes that prior to this NPA norms or IRAC norms or provision norms, what system was followed by the banking system, entire Indian banking? So prior to that, a system which was followed, that was called health code system. Health code system. Just remember that this sometimes some MCQ comes, so you should remember that. And so that system was called health code system. So health code system means according to the health of the loan. So we are talking about the loan only, credit risk, so loan. So according to the health of the loan, a code was assigned. So a loan which is totally regular, everything is fine, the borrower is paying his installment or running a CCOD account is continuously running, interest is serviced by the borrower, there is no default by the borrower, then that code was 1. So health code 1 means it is a good account. Similarly, little bit of some sign of sickness started, so 1 month default or 1 month's interest is not served. So in such a way, the account code will come to 2. So in that way, we can say that we will assign a code 2. 2 means it is not perfectly regular, but little bit of irregularity is there. Similarly, again, a little bit more irregularity means the code will become 3. So up till 4, 1, 2, 3, 4 were assigned to the loan account which are considered as healthy. Healthy means there is no such severe problem. So that means sickness is there. 4-3 means little bit sickness, but this sickness can be treated at home. Means there is no need to go to hospital. So a patient is sick, but he can be treated at home. This is the condition. 1 is ekdam perfectly healthy. 2 is little bit, say cold or cough is there. 3 means fever has started. 4 means fever has increased to 103 or 104. But there is no need to go to hospital. So 1, 2, 3, 4. Next comes when you are hospitalized. Then the sickness has been increased in the loan. So almost 2 or 3 or 4 months default has been started. So he is not paying regularly. So 5. Then comes 6. Again, the irregularity is more. Then 7 and finally 8. 8 is assigned to those accounts where the bank found that there is no possibility of recovery of this loan. So bank has to file a suit in the court of law. So suit in the court of law. That is the final thing. That means it is almost on the deathbed. 5, 6, 7, say we can say that 5, 6, 7 are in the ICU condition. So recovery is very less. Recovery of the patient is very less. So the 8 is almost deathbed. So bank cannot recover anything. So bank has to file a suit in the court of law. At those times, the SARFAESI Act was also not there. Because SARFAESI Act came into existing in 2002. Prior to that, for recovery of any of the loan, if any collateral security is there, land, building or anything is there, you have to go to the court only. There was no option. You cannot sell it directly. You have to go to the court, get the decree, then you can sell. There was no other thing. Now, after the SARFAESI Act has come into picture, bank need not go to the court. Bank can acquire the property and through auction bank can sell. So that is the thing. So that time it was not there. So what was the system followed by the banks? The bank was following health code system where 1, 2, 3, 4, 5, 6, 7, 8 were the code given. That's all. And there was no concept of provisioning also. No provision, nothing. So these 2 questions might be coming. Who introduced, on whose recommendation IRC norms was introduced, or prior to IRC norms, what system was followed by Indian banking system. So you can say that Narasimhan Committee introduced this from 1st April 1992, and the system which was followed in banking system, that was called health code system. Okay, so this is the just prelude to the NPA regime. Okay. Now we'll see that how this income recognition and assets classification norms, what is that? Then we will come to provisioning. So assets are classified into 4 categories. So we can say assets of banks are classified into 2 major categories. So one is performing or standard category or non-performing category. So we can say performing asset and non-performing asset. Performing assets are good assets where borrowers are paying everything, all the interests are everything regular, nothing. NPA means default has happened. Borrower has stopped paying the loan amount. So we can say that major division is to performing asset and non-performing asset. Okay. Now these non-performing assets are again performing asset or standard assets are divided into 3 categories again. And NPA are also divided into 3 categories. So performing assets are divided into 3 categories, say SMA 0, SMA 0, SMA 1 and SMA 2. SMA is special mention account. So when an account is assigned as SMA, means little bit of irregularity is there. If a standard account is there where it is not mentioned, any SMA concept is not there, SMA title has not been assigned, that means it is perfectly regular. But when for 1 month period, so SMA 0 means for 30 days period, there is some irregularity in the account. So irregularity is shown for a period of 30 days. So we have to classify that account as a SMA 0. When the irregularity still persists or continues from 31 days to 60 days, then that account will categorize as SMA 1. When it is between 61 to 90 days, then it will be SMA 2. Over 90 days, when it becomes 91 days, irregularity still continues, that SMA 2 will become NPA. Clear? There is no problem. So this is what the standard account has been divided into 3 categories: SMA 0, SMA 1, SMA 2. After that, it becomes NPA. Now, NPA assets are again divided into 3 categories. So first is substandard, second is doubtful, and third is loss. Clear? So there is no issue with this. Again, here also substandard is okay. So doubtful is again divided into 3 categories. Doubtful assets are again divided into 3 categories: doubtful 1, doubtful 2, doubtful 3. Okay, so this NPA's division into substandard, doubtful 1, doubtful 2, doubtful 3, and loss has been divided for one purpose. Purpose is that when it is in substandard, the provisioning percentage will be lesser, whereas when it reaches the loss asset or doubtful assets, the percentage of provisioning will be maximum. Maximum means 100% provision. So provision increases according to the status of NPA. Okay, so this is the background or concept of standard asset and non-NPA assets. Okay, any confusion, any doubt?
No, sir.
No, sir.
So we can go ahead?
Yes, sir.
Yes, sir.
Okay.
Yes, sir.
First, I will understand this basic, then we will move to provisioning when we will discuss the each and individual NPA and SMA 0, SMA 1, whatever is there, we'll discuss that. Okay, when we'll discuss that step by step, one by one, then I will let you know what are the provision, how it is done, how the provision will be, where it is kept, everything. So now we are talking about the loan account. So there are different types of loan account. Okay, so the concept is when a standard asset will become the NPA from this, whatever I explained, can you tell me when a standard account
After 91
90
days.
days.
After 91
There is no repayment
90 days.
principal and interest up to 90 days.
The 91th day it becomes NPA.
Can pay.
91st day, if the irregularity or non-payment of bank's installment, everything still continues beyond 91 day. So from 91st day, it will become NPA. Okay, so this 90 days or concept of 90 days, till 90 days, it will remain standard. It has been, when IRC norms were introduced in 1992, that time this 90 days concept was not there. It was 180 days earlier. 180 days means 6 months period was given. So later on, after 4 or 5 years, it has been reduced to 90 days. So when IRC norms introduced, period was 180 days. But now, for the last 20, 25 years, 30 years, it is 90 days concept only. So if the irregularity or non-payment of interest or installment of any loan account remains unpaid for more than 90 days. So from 91st day, we have to classify that under NPA. Now you don't have to do anything because the instruction is there in the system. So CBS will automatically classify those accounts as NPA. Even SMA 0, SMA 1, SMA 2, it automatically will classify. You don't have to worry anything. Okay, so because those instructions are given in the programming of the banking software, so automatically it is taking to SMA 0, SMA 1, SMA 2, then substandard, doubtful 1, doubtful 2, doubtful 3, and loss category. Automatically it will switch over when the terms and conditions are not satisfied, then automatically it will be moving to next switch. Okay, so now there are different types of loans are there. So how those loans will become NPA from a PA? So this 90 days concept, 90 days concepts are not true for all the loans. Some loans are there where 90 days concept is not there. And some loans are there where the type of loans are different. So according to the type of loan, we have to see the rules or regulations of RBI, what the circulars say. We have to follow those circular, and according to that, we have to classify those accounts to NPA. But most of the accounts, this 90 days concept is there. Few accounts are there where this 90 days concept will be not followed. Okay, so we'll see that what types of accounts are there. So basically, loan or credit facility which are offered to the customers or borrowers, they are of two types. One is running account type, another is loan type. So we can call these are the advances and these are the loans. Difference is that these are running account. So every time you give, you have to sanction a limit here, and within that limit, the borrower will deposit the proceeds and withdraw the amount. Through that, he will service the interest. So these are all running accounts. But loan means these are the loan once it fully disbursed. After full disbursement, there is no further disbursement will be allowed. Only repayments are allowed and charging of interest will be allowed. No further disbursement will be allowed at all. Only repayment through EMI, whatever the installments are done, so those things will be allowed. So this is the difference between a running account and accounts having due date for repayment through installments. So we have running account, we have cash credit, overdraft, packing credit, ad hoc, CCOD or TOD given for CC and OD, then credit cards. So these are different types of account where running account facility is there.
Packing credit, sir?
Yeah, packing credit is also CC account. It is for exports. It is a type of CC account only, but it is for exports. So that's why it is called packing credit. Okay? Packing credits are cash credit limit given to exporters. Since they are in dollar or it can be in rupee also, but they are meant for exports. That's why it is called packing credit. Understood? Yes or
Yes,
no?
sir. Yes.
Sir.
Yes, sir.
So the person who has asked the question, he should at least has the courtesy to say yes or no. You only ask the question, then you vanish from the picture. That is not a good thing for any class. Okay. So please, when you ask a question, when I explain to you it, then you should respond by saying yes, I understood, or no, I could not understand.
Sir, ad hoc CC already, ad hoc means what, sir?
Temporary TOD. Temporary overdraft.
Okay.
While risk management and other things, see, I have discussed about risk appetite and risk tolerance level. Do you remember?
Yes, sir.
What is that? Appetite and tolerance? You don't remember.
Four
Oh, very
entry,
good.
63.
Appetite is a
breakfast.
basic need, and tolerance is the upper level.
Appetite is comfortable level.
Okay. So CC limit is sanctioned, which is sanctioned for a, say 100 rupees. Now that borrower comes for a 15 days, another 10 rupees. So when you are allowed to sanction 10 rupees extra to that borrower, which will be called as a ad hoc limit or temporary overdraft limit. So this is maximum for a 30 days period. So when you will be focusing on the class, when I have explained so many times this, you cannot forget. If you forget, then it will be a problem for you. Okay. So these are the running account and these are the loan account. Okay. These are the loan account. Mr. Naresh, Mr. Naresh, can you please mute your mic? So these are the different types of loans account. Loan account means after disbursement, there is no further disbursement allowed, only repayment is to be done. So to classify these accounts as NPA are little bit different than this account, how they are going to turn NPA. Because here the simple rule will be followed. In this loan account, simple rule is that loan has been given, the borrower has to pay the installment. So installment, what is fixed? Whenever the installment for the borrower is fixed, it contains principal plus interest. Principal plus interest becomes the installment he has to pay. So if he fails to pay the installment which has been decided, or which in the terms and condition he has told that I will pay that. So basically for 90 days period, if he has not paid and it crosses 90 days period, it becomes 91st day. So that means he has neither paid the principal nor he has paid the interest. So when this principal plus interest or the installment remains overdue for a period of more than 90 days, then these accounts will be classified as NPA. Except this BP, bill purchase, bill discount and bill negotiated. Except for this will be treated separately. For all other loan account, when loan is sanctioned, that time means if the installment which is fixed for the borrower, he does not pay for a period of 91 days, then on 91 days, that account will be classified as NPA. Clear?
Yes,
Any
sir.
doubt on?
Yes, sir.
Okay.
Yes, sir.
Sir,
So,
it means either principal or interest.
Pardon?
Sir, either principal or interest. Yeah, to be not removed.
Principal plus interest.
When term loan is given to somebody, whatever the installment he is paying, what is that installment? I told you, installment means what? It
Principal
contains
plus interest.
principal plus per interest.
Yes.
So he is not paying the installment, means he is neither paying the principal nor paying the interest. Okay.
Okay, sir.
Yes, sir.
Okay, sir.
Excuse me, sir. For agri crop loan, it is applicable 91 days.
No,
No,
that
no.
is why I told you some things are there for which 90 days concept is not there. We will come to that. Okay. First, I am telling about the theory. Then I will come to the special things where this 90 days concept is not there. Okay. Gradually, I am coming. So for running accounts, what is the rule for running account like CCOD, PC, and other things I told you? So in such case, rule is that if the account remains out of order for over 90 days, then it will be classified as NPA. So we have to see what is this out of order position. So this out of order position, if this situation or position of out of order exceeds 90 days period, on 91st day it will be treated as NPA. So this out of order situation we will discuss in the next slide. Okay, so you remember for CC, OD and packing credit or running account, the criteria is out of order. Okay, now for term loan, demand loan, it is interest and or installment remains overdue for 90 days, over 90 days. So installment or interest, whatever he is paying, principal and interest together, that repayment is not coming and it is crossed the 90 days concept, then we will classify it as a NPA. Simple thing. Clear? There is no problem. So here the rule is overdue for loan. For advances, it is out of order. Okay, now we'll discuss about that. What is out of order and what is overdue. Then for bills, which I told you, bills purchased, bills discounted, bills negotiated. In that case, if the bills for which the bank has made advance, that bill remains overdue, means it is still not, payment has still not received by the bank. So if that bill remains overdue over 90 days, then that bill will be also treated as NPA. Clear?
Yes, sir.
No
Yes, sir.
confusion?
No.
Any confusion? Just ask me, I will explain here. After one slide, if you ask me, then I will not explain. Because after every slide, I am giving you time. If any doubt is there, you please ask me. No doubt, so I will go. So now, what is not, I have not told, that is a credit card thing is also there. How this credit card will be treated as NPA. So this credit card thing, how there is a different concept for treating credit card to become NPA. Just concentrate on this, I will tell you how this credit card will become NPA. Credit card dues, when the bank will classify the credit card dues as NPA. So a credit card dues will be treated as NPA when the minimum amount due. So I hope everybody is holding a credit card. Everybody must be holding a credit card. So those people who are holding the credit card, do you know what is minimum amount due in the credit card?
5%, sir. 5%.
That means what? 5% or 10%? That differs from the bank to bank. Normally, it is 5% of the total outstanding or total usage you have made. So what is this minimum amount due means? Means, suppose in a month you have used, say, 10,000 rupees. Total usage is 10,000 rupees. So when the credit card bill will come next month before due date, the credit card bill will say that you pay 10,000 rupees. So this is the full amount. This is the full amount you can pay. Or they provide a revolving credit facility. That facility is called a revolving credit facility. It means it is a loan facility given to the credit card holder so that you can pay by installment. So they fix the installment as, say, 5%. Generally, it is 5%. Some bank, it might be 10% also. So it might differ from bank to bank. But most popular thing is the 5%. 5% of 10,000 means 500 rupees is the minimum amount due. So if you pay this 5% of 500 rupees before due date, that means your account is regular. You are paying the EMI fixed by the credit card. And they will charge the interest on the entire amount, whatever the interest calculation, that is totally different. So here, minimum amount of due is 5% of the amount which have been used by you in previous month. So what is the bill has come, total bill amount, 5% will be the minimum amount due. So you are supposed to pay this amount. So if you are paying this, then your credit card is regular. So whenever you are not paying this, that means this is irregularity. So this has become irregular. So credit card dues will be treated as NPA if this minimum amount due, as mentioned in the statement, credit card statement or credit card bill, which is sent to the card holder, if this minimum amount due for the, say, first month minimum due is 500 rupees, you are supposed to pay, but you have not paid. That means next month you can pay, but you have still not paid. Next third month you will pay, you have not paid. That means if the first minimum amount due is not paid fully, when this is not paid fully within 90 days from, remember that is the separate rule, it is not from this date, okay? When this minimum amount due is not paid fully within 90 days from the next billing or statement date. So it will be calculated from the next billing or statement date. From that day, 90 days period will be calculated. If it crosses 90 days, then on 91st day, the credit card due becomes NPA. Suppose, for example, suppose my credit card bill. So my credit card bill, whichever bank I am having, so this one credit card bill always generates the bill on fixed date. Say 5th of every month. 5th of every month the bill is generated. So 5th of each month is called my billing date, or this is called statement date. Statement is generated or bill is generated. So 5th of every month the credit card issuer generates the bill, and for that month, same month, say 22nd of or 25th of same month is the due date within which I have to pay the due. That means if credit card is billing me for on 5th, that means for the last 30 days, say from the 6th of previous month to 5th of this month, whatever I have used, that will be billed on this statement date, and that amount has to be paid within 22nd of same month, either the full amount or minimum amount due. It can be paid. So that suppose this billing date is 5th of August. Say 5th of August was the billing date. So my usage was 6th July to 5th July. Whatever I have used, that is appearing in this bill. And that amount or the minimum amount due, I have to pay on 22nd of August only. Okay. Now this 22nd August, this minimum amount due has not been paid by me. So it still remains unpaid for more than 91 days. But that 90 days calculation will start from which date? It says that it will start from 5th of September. 5th of September. The day will start from 5th of September. Not paid fully within 90 days from the next billing date. Next statement date is 5th of September. So 5th of September we'll see that what is the 90 days period. What will be the 90 days? September 5th means in September we have 26 days. October we have 31 days. So 90 means 23rd. So this is September, October, November. So November 23rd is the 90th day. So within November 23rd, if this minimum amount due which you are supposed to be paid on 22nd August is not paid, say then 24th November, this credit card will become NPA. Clear?
Yes, sir. Yes, sir.
Here another condition is there. RBI says another condition that subject to fact that the two billing dates, whatever the billing date, earlier billing date was 5th August and next billing date 5th of September. Two billing dates should not be more than 30 days per year. That means every cardholder must generate the bill within 30-day period. So it might be one day. So sometimes what happens, some bank may generate on 4th or some bank may generate on 6th also. That is not an issue. But normally the rule says that the gap between two statement date or two billing dates should not be more than 1 month. Not 30 days, it says 1 month. That is one condition only. That means this date and this date, billing date, should not be more than 1 month. Okay? Clear? There is no issue?
Sir, 5th September also counting as sir?
Yeah, 5th September, this is the first day if you count that. 5th September you count. So 90 days when it will happen? 90 days on 23rd November. Yes or no?
Okay.
I have calculated here. Already I have calculated.
Sir, it's 80 days only now, sir. 26 plus 31 plus 23.
December
Oh,
4th. December 4th.
Okay. Sorry. My bad.
It is
my bad.
December
Okay,
4th.
thank you, sir.
December
Yes.
4th, sir.
So here November is 30. So
December.
till 3rd, sorry, this is 3rd December is the 90 days. So NPA will become on 4th December. Okay, good. Thank you. My calculation was wrong. Clear? There is no problem on this.
Yes, sir.
Yes, sir.
So suppose any question comes, you can easily answer on which date. Say question will come that this credit card use was done this date, this was the billing date, and the minimum due was this much, minimum amount due was this much. When this due will become NPA if the card holder does not pay. So you have to calculate in this way and say which is the date. So here I have calculated 4th December is the date on which NPA, this credit card due will become NPA if the card holder does not pay anything. Okay?
Sir, credit card problems also come in this module, sir?
No, that is in retail. That is retail banking. Credit card or calculation of interest, everything that will come in retail banking. Here we are discussing about NPA only, nothing else. Okay. So this is over. Now we'll come to the agriculture account, where I told you that some accounts are there where these 90 days concepts are not applicable. So they are called agriculture loans. So for agriculture loan, a special treatment is there. There is a special treatment for agriculture loan. So agriculture loans, normally they are divided into two categories. One is called short-term crop loan and another is called long-term crop loan. So according to the crop seasons, short-term crop loans are given and long-term crop loans are given. Okay. In such cases, the thing is that for short-term crop loans, if the loan is given for short-term crops, then in that case, the condition is that if the interest and installment remain overdue for 2 crop seasons, then only it will be treated as NPA. Long term, it is overdue for 1 crop season. So it crosses 1 crop seasons, on next day it will be NPA. It crosses 2 crop seasons, next day it will be NPA. Okay? So crop season varies from state to state. And these crop seasons are prescribed by whom? Who decides these crop seasons?
DLTC.
District,
DLTC.
DLTC.
DLTC or SLBC, whatever, DLTC, SLBC, SLBC is the main state level banking committee. Actually, they give this one to DLTC. Then DLTC says that these are the things. So this may vary from state to state. So according to that, the decision will be taken that only norm is applicable that for short-term crop loan, this is 2 crop seasons. For long-term, it is 1 crop season. Normally, this short-term crop, 2 crop seasons means it takes almost 1 year period. And for long-term crop also, 1 crop season is almost 1 year period. So in case of agricultural loan, the period is not 90 days, it might be 1 year period also. Okay?
Yes,
Clear?
sir.
Will Rabi and Kharif crops will be treated as means 2 crop seasons, or it will be treated differently, sir?
You see whether Rabi or Kharif, where this Rabi and Kharif are falling, whether they are under short term or long term. Rabi, Kharif, normally they are all short term. Long term crops, which are the long term?
Sir,
Long-term.
banana farming, coconut,
Sugar
mangoes farming.
Sugar cane, coconut, mango, bamboo, tea, coffee, teak, all these things are long term. Okay. So other things which are Rabi, Kharif, whatever, pulses, all the vegetable, paddy, millets, pulses, cereals, they will fall under crop loan, the short term loan. And other things, sugarcane, etc., they will fall under long term. Simple thing. So Rabi, Kharif is not a matter. So normally you see whether it is a vegetable or paddy, like wheat, rice, millets, pulses, dal, vagara, jo bhi hai. So all things falls under short term only. Other than that, long duration crops like sugarcane, coconut, mango, coffee, tea, bamboo, teak, banana, whatever it may be, they will fall under long term. Okay, no further discussion here.
Okay, sir.
Now,
counts.
huh?
Card counts.
Pardon? I cannot hear you.
Sir, it covers loans issued under KCC only, I think.
KCC short term में आता है ना. KCC are normally short term. Short term crop. Okay, KCC normally they are coming out. So you have to see whether the loan is short term or long term. That's all.
All right. Okay.
Question will not come which will be a long term crop or short term crop. This type of question will not come in our balance sheet management. You should understand, they will say that it is a short term crop loan. So what will be the NPA? So in that case, 2 crop season, simple thing.
Right, sir, right.
Okay. So now, next one we'll see overdue status. What is this overdue? Overdue status is applicable for the loans, as I told you. So overdue means what? When the amount which is payable by the borrower or amount due to the bank from the borrower, if the borrower is not paying on or before the due date, which is fixed by the bank as per the terms and condition, then it becomes overdue. Suppose the due date of installment, first installment, any month's installment is the 10th of any month. So that means from 1st to 10th, within this period, the installment, the EMI should be paid by the borrower. So if he fails to pay on 10th, if it becomes 11th, means it is overdue. So he can pay any day after, there is no problem. But if he does not pay within 10, from 11th, it will be considered as overdue. And this overdue, if it continues for 90 days and it crosses the 90 days period, on 91st day, it will become NPA. Clear? Overdue is no problem. So this overdue status is applicable for term loan, demand loan, bills purchase, bills discount, bills negotiation, etc. Clear? Any doubt on this? No doubt. Okay, fine. This is a simple thing. Next, we will discuss about the out of order status for CCOD account. So there are 4 or 5 conditions Please concentrate and focus on that so that you can understand. Okay. Now, out of what status, how this will be calculated? First is simple thing. First condition is if the outstanding balance remains continuously in excess of the sanction limit or drawing power. So in case of CC or OD, which are the running account, normally they are sanctioned for working capital. So they are sanctioned with a sanction limit against the raw material or bills, whatever you're given. So against that, whatever the raw material, so these loans are sanctioned with a margin of 25% normally. That means 25% margin is his contribution, rest 75% is bank's loan. So sanction limit is suppose 100 rupees. That means this has been sanctioned against the raw material he is buying. Suppose raw material he is buying, and against that he has taken the loan. That means his raw materials should be how much? For 100 rupees loan, if he takes 100 rupees, how much will be his raw material? The stock will be how much? He should have stock of raw material of how much amount?
125.
125.
125. इससे थोड़ा ज्यादा होगा. 125% less करने से it will be a little bit more, na?
At least 135.
133.
133. So if stock is 133, then margin is 28%, then he can withdraw up to 100. So that's why this is called a drawing power is also assigned. After sanction limit, side by side, drawing power is also given for that limit. Means this drawing power will be calculated as per the stock available. So from the stock, we will reduce that 25% margin. Whatever the amount comes, that becomes a DP. So here, if it is 133, then DP can be also 100. So sanction limit and DP can be equal. At no point DP can be exceeding the sanction limit. DP will never go over sanction limit, but it can come down also. Suppose he has a stock of say 100 only. In such cases, what will be the DP? What will be the DP? 75. That means we will only allow up to 75. He is not allowed to withdraw 100 because the raw material stock is less. So according to that, we have to apply this margin. Then we will find the DP becomes 75. Okay. So now here the first condition says that if the outstanding balance remains continuously in excess of the sanction limit or drawing power. That means suppose first case this one. Suppose sanction limit is 100, DP is 100, but the debit balance in CC account remains as 105. So this 105 is excess to sanction limit as well as DP also. Second case, suppose sanction limit is 100 and DP is 75 and balance is say 76. Then also this is excess because whichever is lower, that exceeding 1 rupee exceeding. So this is also excess position. Whenever the amount debit balance or outstanding balance in the CCOD account remain continuously in excess of the sanction limit or DP, then that position is called out of order position. Clear? This is the first condition. Any doubt on this?
No, sir.
No, sir. No,
Ah,
sir.
sir.
No. Why it has become excess, that is no justification. It might be excess he has taken, or it might be due to interest or any other charges, whatever. Simple thing. The balance outstanding in the CCOD account is more than sanction limit and DP. Then this status is called out of order status. Okay. So this out of order status, if remains for 90 days or crosses 90 days, on 91st day it will be NPA. Same rule applicable. Okay. So this first condition is. Now second condition. Outstanding balance is less than sanction limit or DP. but there were not enough credit in the accounts to cover for the corresponding debits during 90 days period. Say here 100 rupees was sanction limit and DP was say 75. Pardon? Hello?
Not audible, sir.
Anybody else? Can you hear me?
Yes, sir.
Audible, sir.
Mr. Biswajit, you check your system, okay? Your laptop or phone, whatever they you check it. So, sanction, second condition. First question is over. Second condition is sanction limit is 100, DP is 75. Okay, but balance, outstanding balance. Suppose this is the outstanding balance. Outstanding balance is less than sanction limit or DP. So, suppose outstanding balance is 70. So it is within DP and sanction limit, there is no problem. But there were not enough credit in the account to cover the corresponding debits during the 90 days period. Means we have to see during this 90 days period, whatever the 90 days period we will see, these are the dates. 90 days period, we will see normally in this account what happens. Say there is debits are happening, then credits are happening, then here your balance is there. Okay, now according to this, the balance is 70, where this sanction limit is 100, DP is 75. So this is within the sanction limit and DP. But 90 days period, we'll see what is the summation of debits, total summation of debit. Suppose total summation of debit for 90 days period is 100 and total summation of credit is 99. That means total debit is not fully covered by total credit for those 90 days. So this is also out of order situation. Even though the balance outstanding is within the sanction limit and DP. Third condition
can I
is...
ask one question? Sir,
Sir,
all
is
the
that
debit will
interest
be considered
debits
or only interest portion, sir? All the debits or only interest portion?
All the debits, whatever total debit, your principal, interest, whatever, total debits should be equal to or more than, should be less, equal to or less than the credit. If it is 100, then there is no irregularity. Which means 90 days debits should cover the 90 days credit. Whatever debit credit total summation.
Sir, even that business trade debits also, there should be correspondent credit. I think only that interest debit only we are considering, sir, here.
Yes, sir. Right now the system is acting like that. System is considering only the interest portion, sir, right now.
No, it is not true. Say, auditor will come and it will classify it as NPA, simple. Because I have faced auditor, this is the RBI circular. In my branch, I have faced thing. There was a less, say, less amount of credit for 10,000 in an account which is a corporate account. 10,000 less credit was received for the 90 days period, and he classified that amount, the sanction limit was 4 crore. He classified that as a NPA. This is the RBI guideline. I am not taking. So your bank might be doing that, but this is the RBI guidelines I am telling.
Okay,
These are the lines from RBI circular. Okay. Now you interpret and you satisfy your auditor. Usko khilao pilao kuch karo wo nahi dikhayega. That is different thing. Okay. But this is the thing. Second, third, this condition is that suppose debits are there and there is no credit. If it is 0 also, then it is out of order. Okay. So if it crosses 90 days period, then it will be NPA. That is what this meaning of this second condition is there. If the credits are less than the total debit or there is no credit at all for 90 days, then it will be considered as out of order status. Okay. So these are the two conditions. Third condition is a technical condition. This is not according to the balances. This is a technical condition. technical conditions, normally CCOD, when it is sanctioned, they are sanctioned for a period of 1 year only. After expiry of 1 year, it has to be renewed. The limit should be renewed. So the borrower should submit financial paper and it has to be renewed. So in that case, to submit financial paper, everything, it takes time. So in such cases, RBI says, if the renewal of limit is not done for a period of more than 180 days from the date of renewal, which is due, then it will be treated as out of order and it will be treated as NPA. So you have to renew within a period of 180 days. If it crosses 180 days, then next whatever the balance, whatever is the account may be regular, everything, but it has to be treated as NPA. Next technical condition is normally CCOD sanctions against raw material, whatever is bill or something. So they have to submit stock statement every month or whatever the period is, fortnight, month. So if the stock statements are not submitted for more than 90 days period, so on 91st day, the account will be treated as NPA. Because all the CCOD, we are allowing the limit against the stocks. So fresh stocks he has to buy, so we are allowing. So if he is not submitting stock statements, means there is no stock at all. So you are allowing the limit on a very old stock, which was already 90 days old. So that's why it is technically NPA. So these are the conditions for, yes.
Sir, one question, sir. Sir, in present scenario, many small CC cases, the stock statements are taken on quarterly basis.
In that case, that is exceptional. That is exceptional. Quarterly basis means, so normally when it's quarterly, means 3 quarters you have to see. In that case, it will refer. That way, 3 quarters has to be taken into consideration.
Sir, and if it is not quarterly, monthly, for example, if a stock statement is submitted in January, and if it not submitted in consecutively for February, March, April, then the account will turn NPA in April or May, sir.
No, you have to see what is the stock statement date you have given to the borrower. You must have given some date, within 7th of month, within 5th of month.
10th of month if we give.
So 10th of month he was supposed to submit. Okay. So he has not submitted. So you calculate when it is 90 days.
So 10th January he had submitted. Then
so when it will be 90 days, you say, you calculate.
February,
so
March,
10th
April.
means you are supposed to 10th. So in January, how many days? 31 minus 9. So 22 days in January, 28 days in February, 31st in March. So how many this is?
9, 1, 10 on
91 days. So till 30th of March, it is okay. On 31st March, it has to turn NPA.
Okay.
Okay. Now, so what we have understood, how you are classifying the asset. It is based on age of irregularities. So 90 days period concept. So this is age of irregularity, 90 days concept, or 180 days concept, or season concept, 1 season or 2 season crop seasons. These are the age related concept for classifying the asset as NPA. Second condition is that sometimes some borrower account, loan account, fraud is happening. When fraud happens, whether the account is irregular or regular, when fraud is detected and classified by the bank that it is a fraud which has happened, on that day itself, it will be turning NPA. It will be turning NPA. Clear? Yes or no? So NPA, and it will be whenever fraud is happening, and it will be turning NPA and straight away a doubtful category. It will not go to substandard. First category, it will not go. So if fraud happens, directly it goes to doubtful category. Doubtful 1 category it goes. Okay. Now, another thing happened, which may be due to erosion of security. Means value of security you are having, that is a fall of value of security or depreciation of security has happened. Means suppose 100 rupees loan was given and 100 rupees of security was there. So in such cases, security value due to any reason, security
No
value.
audio, sir.
Anybody else?
No, it's okay, sir.
Yes,
Okay.
sir.
No,
Yes,
sir,
sir.
it's audible.
Audible, sir. Audible.
So 100 rupees security you are taken, and due to some reason or other, security value has depreciated. So if the security value depreciates more than 50%, that means the value from 100, it becomes say 49. So it has reduced more than 50%. In such cases, so this is called erosion of security value. In such cases, irrespective of the account, irregular, whatever it may be, straight away it will go to doubtful one. Okay. And if the security further depreciates or goes down by more than 90%, that means the value comes to 9 rupees. 100 value comes to 9 rupees. So straight away it will go to loss asset. Okay. Any confusion on this?
Sir, can you
Yes,
please
sir. D3 in this, sir.
50% of
D3 in this, sir.
See, one by one, please. What is your question? Tell me.
third
Tell me,
one, sir.
question.
50% of
They-
security, sir. Erosion of 50% security value or the sanction limit, 50% of sanction limit, sir.
What is the here? It is written
100.
sanction limit. How is sanction limit
Sanction
will be?
limit.
How sanction limit will be depreciating?
No.
When
No,
we
no,
are talking about security, when I
Yes,
am
sir.
telling about the security collateral, I have told that this is sanction limit where you have sanctioned and you have taken collateral security of 100. I am talking about the value of collateral security. When the value of collateral security has become 49, then it becomes doubtful one. When the value of security becomes 9, then it goes to loss.
So no D2, D3 category will come in this sort.
That I will discuss. That you will know. Straight away, doubtful it will come. D2, D3,
If
that is
security
after.
value is, if security value is 120, sir, initially, then
See, that's why I told you, if the security value erosion of value is more than 50%, but less than 90%, it will be in the doubtful. If it is more than 90%, it go to loss. Simple thing.
Okay.
Okay? Is it clear now?
Yes, sir. Yes, sir.
So two limits I have given. So one is more than 50 up to 90, it will be in the doubtful. More than 90, it becomes a loss directly.
So his question is,
Sir, even though the
50%
reduced
of the
value
sanction limit,
is sufficient to cover the entire limit. For example, if he has taken 200% or 300% collateral security, if it is matched with the sanction limit after erosion of 90%, even though we have to classify it as loss.
So you are telling, suppose sanction limit is 100 and he has given 500 rupees security.
Yes, sir. Yes.
Right. So in that case also, irrespective of sanction limit, it is all based on the erosion of security. This is totally different. Okay. It is due. See why the security has eroded. Why should logic is that if security is eroding more than 50% or more than 90%, that means one day it will become zero. So you will be at loss, na?
Right.
So you have
either
to
fraud or something should have happened, or something else, extraordinary things should have happened.
So these are the different principle for classifying to NPA. So one of the principle is age, second is fraud, third is erosion of security, fourth is record of recovery in the account. Means in between 90 days, if some recovery is coming, immediately it will be upgraded to standard account only. So NPA classification will also depend on recovery. If in between, say 90 days concept was there. It is just on 90 days, he has given all the 3 installments. He has serviced interest, everything. That means it becomes again standard account. So for next default, again, we will see whether it is defaulting for next 90 days or not. So classification of asset is also based on record of recovery in the account. If there is no recovery, then it will be NPA. If in between recovery is there, then it may be extended also. Suppose, say, first installment was supposed to be paid on 10th of August. He did not pay. Even 10th of September, he also not paid. Now, he has paid on, say, 1st of October. So this installment has been paid. Now, 10th of September has not been paid. So we will just cancel this one because it has become regular now. From 10th of September, we will see how this installment is whether recovered on the 90 days or not. So according to the recovery of that installment or interest, whatever is there, again the classification will be either extended or the period will be extended or it will become totally say standard account.
Sir, this example was for term loan. If it is for CC cases, then there are, other than interest, there are unknown debits, some more debits. Then how will calculate that? How 90 days would be means extended?
I didn't get your thing. What is your question?
Sir, the example you gave was of term loan, that the installment is due on 10th. But if it is a CC account and
I have to, you have not listened to what I told installment or interest. I told you or not.
Sir, but interest and a few more debits goes off.
Whatever it may be, interest. Suppose few more debits are there also. Interest is served in CC account or not. If he serves interest also, then it will be extending. If he serves interest for 1 month in CC account, automatically the 30 days period is extended. 1 month interest was due. For that reason, it has crossed the outstanding has crossed the sanction limit. Interest was 10 rupees. 100 was sanction limit. DP was also 100. So 110 was outstanding. And he has paid 10 rupees. That means it has become 100. It has become regular again.
Okay.
Then restructuring status of the account. Sometimes the accounts are, somebody has asked some question. I'll just see. When the security erosion will happen. Okay, very good. So suppose somebody has given some shares or bonds or debenture of a company. So whether these share, bonds and debentures are the price of the share, debenture, bonds are always same?
No, it fluctuates.
So it might possible that the company might have totally closed. In that case, the share price might have 0 also. Okay. In such cases, don't think that it is always a fixed deposit or NSC or land or building. Normally those things are gold. These are the things normally they don't depreciate. Other types of securities are also taken by the bank. So in such cases, erosion of security is also available. Suppose somebody has given a, say, land or building. Okay, land building has been given. And that land and building has been destroyed in an earthquake or it has been due to fire or something, everything is totally destroyed. The factory is destroyed. So whether the value is coming down or not.
Yeah. Yes, sir.
So these are, somebody has asked, give me example. So these are the example where security value might also
these are acquired by government bodies also, then also erosion takes place.
So many reasons are there. So if it happens, then it will be there. Okay. Now restructuring status of the account. So once a account to save the account from becoming NPA, so normally restructuring is done by the bank. Restructuring means normally the period is extended. Loan period is extended so that the EMI becomes lower and it is possible for the borrower to pay. So normally it is done in the term loan and demand loan only. In such cases, restructuring means restructuring is a status which is not totally a standard account. It is a in between standard and NPA account. in between. So the provision will be more for restructuring, and restructuring is done for once only for account. It cannot be done frequently. So second time if you are restructuring, then your board's approval is required. If it is not approved by board, then automatically it will be treated as NPA only. Okay. Next is auditor view on the account. So auditor goes as per the RBI's line by line words. So whatever auditor say your statutory auditor comes for auditing everything, your closing statement, everything after every closing. So whatever their view is there, they will go word by word of RBI circular. So when they will certify that this account is NPA, so that will be classified as NPA. So these are the basic things. Okay. Now, according to that, income to be recognized. So as long as the account is a standard account, only you can debit interest or charge interest and credit that interest to P&L account. Once it has become NPA, you cannot debit interest. So interest application is stopped immediately. And whatever suppose on date NPA has happened, so earlier 90 days period, some interest might not have been paid by him. Definitely for 3 months or something he has not paid. So all these unpaid interests which are supposed to be paid by the borrower, that has to be reversed. Means you have already debited it and credited to P&L. Since it has done NPA, entire amount you will have to debit P&L and credit back to the loan account. So that is called reversal of income. So whenever an account turns NPA, whatever the unpaid interest which has been charged in that account, entire interest of 90 days period, whatever the unpaid interest will be there, they have to be debited from P&L account and credited to loan account. Okay? Clear?
All unrealized interest means for period of three months interest you are talking.
Why you are classifying that amount as NPA? What is the rule?
Non-payment of interest for consecutively 3 months.
So either out of order
please explain
or
with an example.
Overdue or out of order situation, right? You are classifying NPA for an account due to 2 reasons: overdue or out of order, or due to fraud, or due to erosion of security. I have told you all these reasons. Yes. Okay. So during that period, whatever the unrealized interest means interest has been debited to the loan account, borrower has not paid. So entire amount has to be reversed to the loan account.
Got it, sir. Got it.
Sir, there would be an entry in the loan account, but we generally don't see such entry.
Reverse this interest, sir?
Pardon?
Why we have to reverse this interest?
Why you have to reverse?
Interest to...
Because rule says, see, suppose you are debiting one interest, so debiting one term loan account, say 10 rupees interest you are debiting, immediately you are crediting to your P&L account. Okay. Yes or no?
Yes, sir. Yes,
so
sir.
this entry is a book entry or not? This is only book entry. ये आपके पॉकेट में आया है क्या? अभी तक आया है क्या?
No.
10 रुपया आपने चार्ज किया, आया है क्या? Has it come to your pocket?
No.
When it will come to pocket? When the borrower will pay. When the borrower will pay. So whenever borrower is not paying, so it is not your money, you cannot show it as income. Simple thing. Logic is that. As long as the borrower has not paid, you cannot show it as an interest, your income.
Realization concept.
So that's why it is called income recognition. Clear हुआ कि नहीं? Have you understood this?
Sir, we understood, but I have not seen a reversal of
Yes.
unpaid interest in the loan accounts.
You go and see. If you are not seen, you go and see. Whenever the NPA is happening, you see the statement of account, you will see that reversal is done by the computer because manually it is not done.
Yes.
You go and see.
It is due to the non-submission of the stock statement.
What is your question?
No, if the NPA classification is due to the non-submission of stock statement or non-renewal, the reversal will happen.
Yes.
Interest reversal will happen?
Yes. When it becomes NPA, if he has not paid any interest, then that has to be reversed. If he has paid interest, why you want to reverse?
That is why it is called technical NPA, not financial NPA.
Samjha karo na. That is logic you do not understand. Suppose it is a regular account, it is not renewed. He is paying all the interest. So he has paid means it is your income only. If he has not paid any interest, you have to reverse. Unrealized interest, here it is written, kindly read this. Unrealized means if he has not paid, you have to reverse. If he has paid, why should you reverse? So that is called income. Income to be recognized when the borrower pays. If borrower has not paid, only book entry you have debited, then you have to reverse. That is the rule of income recognition.
Sir, it means for all the NPAs, reversal will not happen. Only for the non-payment of interest cases only, reversal will happen. Right?
You read about, again I am telling you, what do you mean by unrealized? You are asking again. Unrealized means what? Unrealized means what? Unrealized means what? What you are repeating the same thing for that. Unrealized interest. See, RBI has given the circular they have used. I have not written this word for myself. Unrealized means definitely it has not been paid by the borrower. Simple logic is there. We are wasting all the time unnecessarily because I wanted to complete this. I think it will not be completed today. Simple thing. Okay, so now another thing you should remember this. Classification of NPA of any borrower. So borrower's account, one borrower is there. Classification of NPA is done borrower wise. And it is not facility wise. This is very important thing you should understand. Classification of interest is done borrower wise, not facility wise. Simple I am giving. Suppose X is a borrower. You have given 3 loans to X. One business loan, say one CC account, one housing loan, and one vehicle loan you have given. So one borrower, your bank has given 3 loans to him. And here the vehicle loan becomes NPA. These loans are irregular. So here you should understand X has been given 3 loan facility. So facility wise, he has been given 3 facilities, but borrower is 1. So if he is enjoying 3 facility from the same bank, one bank, this is the only one bank, and one of the loan becomes NPA, you have to treat all 3 loans as NPA, irrespective of the status of these things. So that's why it is called classification of NPA is borrower wise, not facility wise. You cannot say that only vehicle loan I will classify NPA. These are good accounts, so I will keep it as PA. No, it is not possible. You have to classify all as NPA only. Clear?
Yes, sir. Sir, instead of borrower, if he stands as a guarantor, that also will be classified as NPA, sir?
I don't get your question. Who has taken the loan?
That wife has taken a loan and husband has joined as a borrower. Husband become NPA in some other account. So he has, since he has given a guarantee to wife's account, whether he will
simple thing. Whether the husband is a borrower or guarantor, you tell me.
Guarantor.
So how guarantor becomes borrower? How the guarantor becomes borrower? What is the relationship between guarantor and the creditor? And what is the relationship between legal relationship borrower and creditor? Is it same or different?
Different.
So then Why you are asking this question? How it is when borrower is, we are talking about loan. Loan means it is pertaining to borrower. Guarantor is a security. It is a collateral security. Borrower, who is the borrower? Question is, who is the borrower? Are you understanding my explanation or not?
Yes, sir. Yes, sir.
If husband is a co-borrower, means he is a borrower. Husband is a guarantor. He has given guarantee. He is not at all into the scene at all. He is not coming to scene as a borrower. Okay.
Okay.
Now, for some account where this loan against some liquid securities are given, like loan against FD, NSC, and your Kisan Vikas Patra or LIC policy. So in such cases, RBI says, in such cases, they are treated as, normally they are treated as liquid security. And in such cases, loan will be treated NPA only when the margin, when there is no margin is left. No margin is left. Till that period, you have to consider those accounts as PA only. Means if sufficient margin is available in such loan account, which are normally demand loan you give, as long as sufficient margin is available, you should not classify this NPA, even if they are not serving the interest. Because normal demand loan, there is no installment payment, only interest can be paid. So as long as there is enough margin to cover the interest, means FD, NSE, always these values are increasing. The value might be increasing day by day because of interest which is accrued on the FD. So as you have to see that what is the loan amount and what is the FD amount. So there is a margin available. Even 100 and 110, still 10 rupees margin is zero. So RBI says, as long as sufficient margin is available, you should not classify such loans which are secured by FD, NSC, KVP and LIC policies. You should not classify NPA. When there is no margin is available, then only you can classify NPA. Okay? And this is not applicable for gold loans. Okay? Now this already have discussed. And in case of consortium loans, now in case of consortium loan means, do you understand what is a consortium loan?
Syndication like that.
Yes, sir. Any banks consult with the same assessment if they are given.
Okay. So one borrower, X is a borrower company, and he has been given a big amount of loan by 3 banks. Say bank A, bank B, bank C, and this is under consortium. So this is not that A bank has given separately, B bank has separately, C bank has separately. No, this is a consortium account. Means here one of the bank is a lead bank. Say B bank is the leader, consortium leader, and with B bank, all the documentation of the account and all the security, whichever is given by X, it will be with the leader only. Only thing is that A will have one CC account, B will have CC and term loan account, and C might have another term loan account also. So likewise, total amount, say sanction, say 2,500 crore is sanctioned. So this bank has sanctioned differently. Now what happened? Suppose in one of the bank, suppose this CC account with A bank has turned NPA. So here that borrower-wise concept is not applicable because there are 3 different banks. So in case of consortium account, this NPA classification will be as per the bank where the account become NPA. These banks A bank's account has turned NPA, but B bank's 2 accounts are there, they are regular, and C term loan is also regular. So they need not classify them as NPA. Only A should classify as NPA. Clear? In case of consortium, it is as per individual bank's rate of recovery, record of recovery. According to that, the account will be treated as PA or NPA. Any confusion on this?
No, sir.
So classification for consortium is based on record of recovery of individual bank member. Okay. Now we'll see loan with moratorium for payment of interest. In such cases, so normally it will be treated after the moratorium period is over only. So that 90 days concept or 180 days or the season, whatever thing is there, they will be starting after the moratorium period is over. Within moratorium, this is not to be calculated. Okay, clear? So anywhere the moratorium has been sanctioned, in such cases, the date of calculation of 90 days or 180 days or whatever date is, it will be starting after the moratorium period is over. From that day, we'll start. Okay. Now, asset classification is done. As I told you, these are the different asset classification. So first is standard. These are means good assets. Then when it becomes NPA, first is substandard asset. So in substandard category, the period for which this NPA period is 1 year only. So a loan or advances which turns NPA, it will stay in the substandard category for a period of 12 months only. After 12 months, immediately it will go to D1 or doubtful one. So doubtful one also, it will be staying for 1 year period. After that, automatically it will shift to doubtful 2. So doubtful 2 means second year and third year it will stay here. So another 2 years. So more than 1 year up to 3 years. So when it is more than 3 years, automatically it becomes doubtful 3. So there is no cap here. Above 3 years, it may stay for 10 years also. There is no problem. Okay, so these are the substandard doubtful. Now, loss asset is only when there is no recovery possible by the bank, or there is 90% or more erosion of security which has happened, or fraud has happened and there is no security available. In such cases, or the auditor has certified that this has to be classified under loss, so loss asset will be classified in that case. Any confusion on this?
No,
Okay.
No, sir.
So here 1 year, here 1 year, so 2 years. So when you go to D1, doubtful one means 2 year completed. Doubtful 2 completed means 4 year completed. After 4 year of completion, it is coming to doubtful 3. Okay? Clear? There is no question on this?
No, sir.
Okay. Okay. Now, as per this classification, we will see there are provision for standard assets also. There is provision for different provision for NPS. So next slide, I will show you what are the provisions. So for a standard asset, see that provision is very less amount. So provisions are like this. Agriculture and SME account, standard asset. We are talking about performing asset. NPA asset will come later. Okay. So performing asset, agriculture SME loan is 0.25%. Commercial real estate loan, 1%. Real estate housing and residential loan, 0.75%. Restructured loans, which are still under standard category, 5%. Other than this, anything which is not falling under this category, they will have 0.40%. So you have to remember all these things, because in the question they will not give you all these things.
25%, 1%, 7%.
So these two you can easily remember, because in risk management we know that commercial real estate 100% risk weight and 75 risk weight for real estate housing. So you can relate that 1%, 75%. Restructured is 5%, you can remember. Otherwise, agriculture is 0.25. Other than that, anything it is 0.40. Okay. So this is what the standard. Now when it becomes substandard, हाँ
सर ये परसेंटेज आउटस्टैंडिंग अमाउंट पे ना?
हाँ यस, नहीं तो आपका बेसिक पे हो गए क्या? जो लोन, see when you are doing this provision, when the provision of the things are done on which date? Every
31st March 2002.
Every 31st March, when annual closing is done, that time it is done. So on that, whatever the loan amount is there, on that all these provisions will be made. Okay. Now substandard. For substandard normal accounts, there is a second thing called accounts having escrow account where it is there, that is different. So other than this, you see, so provision rate for secured person, here for NPA again it is divided, these provisions are divided into two categories. So loans are covered with security. So suppose 100 rupees loan is given. So loan is given 100 rupees and it is secured by 100 rupees collateral security. So collateral security 100. That means it is fully secured. So we can say that secured person is 100, unsecured is 0. Suppose a loan is 100, but 80 rupees security available. That means unsecured is 20? 20? Yes or no? 80 rupees security available. That means 100 rupees loan we are given, out of which 80 is secured. So 100 loan amount minus security is the unsecured amount. Okay. So for NPA, we have to calculate provisions percentage as per secured person and unsecured person. Okay. So this will be applicable. Secured and unsecured person, always it will be applicable for doubtful and loss as per this thing. But in case of substandard, it is little bit different. It is also there, the percentage is given, but when it will be calculated, also. So for a substandard account, the secured person will have 15% of provision, unsecured person have 25%. Okay, but in case of such loan account or infrastructure loan which is given, normally in those infrastructure loan, an escrow account is maintained by the borrower. So if such escrow account is available, in such cases, only difference is that for the unsecured person, this 25% is reduced by 5%. So it is 20%. Okay. Now, for substandard, when you will consider that a substandard loan is having unsecured exposure. So for doubtful and loss, whatever I have given the example, that is possible. Say 100 rupees loan outstanding and 80 rupees is security available. So that means 20 is the unsecured. This rule is applicable for, directly applicable for doubtful and loss. There is no problem for that. But in case of substandard, little bit different approach is there. Here it says that in case of substandard account, as long as the security available is not less than 10%, not less than 10% of the outstanding amount, then the full amount will be taken as secured only. If the security available is eroded or it is less than 10% of the outstanding, then only you have to take the unsecured person. Clear? So in such unsecured person wherever is there, then this 25% will come to calculation. Otherwise, only 50% will be taken. So that means, as per RPI, where in case of substandard, when we will see that which is an unsecured exposure. So unsecured exposure is defined as the exposure where the realizable value of security as assessed by the bank or approved valuer or Reserve Bank of India or auditors is not more than 10% of the outstanding. In that case, it will be treated as unsecured. Otherwise, that means if 80 is security available, 20 is unsecured, means we have to take that it is fully secured and only 15% provision will be taken. 25% is not required. Okay. Other than that, the provisions are for doubtful, it is 25% for the secured person, 100 for the unsecured. 40 is for the doubtful 2, 100 is for unsecured. 100% and 100% for the doubtful 3, both. And loss is also 100 and 100. Okay. So you have to remember all these things because question will be asked. So you have to calculate in that way. Clear? Suppose the doubtful balance is there. It's a doubtful 1 is there where outstanding balance is 100 and security available is say 50. Now you tell me what will be the provision. This is the security.
25%.
25%.
25%.
This is doubtful. Doubtful.
22.5. So 62.5.
So doubtful will be, so unsecured is also 50. Okay. So 50 is 25% is how much? 12.50. 100% of 50 is 50. So total will be 62.5. Clear? Like this calculation has to be done for each category. So secured, unsecured, you have to see and you have to add those things by applying the respective percentage and total provision for this is 62.50. Clear? Any question on this?
Please once again repeat for substandard.
Whether accelerated provisions is applicable for this type of exam, sir?
Where you have read this accelerated provision?
For non-reporting of corporate account to RBI.
For what? Non-reporting of what?
Non-reporting of that I forget, sir.
So you read it and then ask the question. Okay, you read it. Wherever you read it, you go and read it. Then you will ask me in the WhatsApp group. You ask. You know it and you are asking me.
Okay.
I am not discussing this accelerated provision again.
Okay.
I am not discussing. I am discussing only normal provision. Okay.
Okay.
So that accelerated provision is totally different. So now somebody is told that substandard. How substandard will be treated? Substandard account will be so substandard account. So as per the prescription, it is 15 and 25%. So this is secured. This is unsecured. Okay. Now, when this substandard account, we will consider that this has got unsecured or not. For that, you have to see what is the security available. Suppose loan outstanding is 100. Security available is 80. So as I told you, for unsecured exposure of substandard account will be treated only when this security which is available is less than 10% of the outstanding. So here if it is 80, then we will not consider that it has got 20 unsecured. So we will not calculate this 20%, 28%. Only 15% of 80 to be calculated. If 100 rupees is the loan and security available is 9, in such cases, we will see that 9 is the security and 91 is the unsecured. So 9 into 15%, 91 into 25% will be taken into provision. Is it clear?
Yes, sir.
Yes, sir. Now, sometimes some other special provision is there where some guarantees are given by government agency. For example, CGTMSE. or say Credit Guarantee Fund Trust for Low Income Housing, or some other agencies are there. So they have given guarantee, which are government agencies. For them, RBI says, while calculating the provision, you should exclude the guaranteed portion. Guaranteed portion means on the guaranteed portion, provision will be 0%. No provision is required for the guaranteed portion. Okay. You are getting my point?
Yes, sir.
Yes, sir.
Yes or no?
Yes, sir. Yes, 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 sir. Yes, yes.
Okay. So I'll give you an example. So it says no provision to be made towards guaranteed portion. Whatever the amount which is guaranteed by government agency, you have to take that out. It will be totally taken out from the outstanding balance. You minus that one. Then you see what is the secured, unsecured portion. Accordingly, you have to calculate. So I'll give you the example. Suppose loan balance is 10 lakh rupees, and there is a CGTMSE cover. Okay, asset classification is doubtful for more than 2 years. So doubtful for more than 2 years means, is it D1, D2 or D3?
100%.
D2.
This is D2. So D2 has secured portion how much? D2?
40%.
40% and 100%. Okay. Now value of security available is 1.5 lakh. Okay, now what is the thing? So outstanding balance is 10 lakh. Okay. Security available how much?
1.5.
So secured person is security available. Secured person is 1.50. So total unsecured how much it will be? 8.50. Okay, this is the unsecured person. So secured person, we know this is for security. So 40% provision is required per year. Now unsecured person is, but we have a CGTMSE cover here. So CGTMSE cover, suppose how much it will be there? So CGTMSE cover as per this 75% of the amount outstanding, or 75% of the unsecured amount, or 37.50 lakh, whichever is less. So 75% the amount outstanding means how much? 7.5 lakh.
7.5.
Or 75% of unsecured amount. So unsecured amount is 8.50. 75% is how much?
0.38.
6.38 or 37.50. Out of this, whichever is less, that will be the guarantee available. So guarantee available through CGTMSE is 6.38. So we have to deduct this one as there is zero provision on this. So unsecured was 850. Out of which CGTMSE guarantee is there. So we have to deduct this one. So what will be the left?
2.12.
2.1. So this is the unsecured portion where the 100% provision will be applicable. So 1.50, 40% means how much?
0.6.
0.60, 0.60, and here 2.12. So total provision is 2.7. Clear?
Sir,
Okay.
please repeat.
Clear, sir.
What repeat? Here it is written. What is to repeat?
6.38, how it came.
Because you are not reading this. What is the conditions? What is it? What is the first condition?
75% of the amount outstanding.
So how much that is?
7.5 lakhs.
7.5 lakh. Second condition, 75% of the unsecured amount. So unsecured amount, how much? Unsecured, we have calculated 10 minus 150. Unsecured 8.50.
8.5.
So 75% 850, 8.5 is how much? 6.38 lakh. Or 37.58, 50 lakh. Whichever is lower, that will be the guarantee cover given by CGTMSE. So out of three, which is lower?
6.38.
6.38. So that is the guarantee cover. Okay. So I have told. So first you see what is the outstanding amount less the secured amount 150. So 850 is the unsecured. So this is the secured amount, or 850, out of which 630 is the guarantee cover. So no provision required. So rest amount will be our unsecured amount. So this is unsecured amount. Secured amount will have 40% of provision. Unsecured amount will have 100% provision. So total comes to 2.72 lakh. Okay?
Yes, sir.
Okay, sir. Thank you.
Okay. Now there are 2-3 more things you have to complete this. So sometimes you have to find what is the gross NPA, they will ask, or you have to calculate gross NPA percentage, and what is net NPA and what is net NPA percentage. So gross NPA means total NPA, whatever the total NPA of the bank as on date. So total NPA of the bank is also called gross NPA. Now what is gross NPA percentage? How to calculate gross NPA percentage? You might be seeing in the publishing, in the newspaper, say gross NPA is this much of this bank. Say 10.5% of the this bank's gross NPA is 9.5%. So how they are calculating? So gross NPA percentage is calculated as total NPA divided by total advance of the bank multiplied by 100. So whatever the percentage is coming, that is the gross NPA. Means out of the total loan and advances given by the bank, how much is the NPA? So 100 rupees, suppose NPA total advance. So it says the 9% means out of 100 rupees, 9 rupees is NPA amount only. Clear? This formula is okay?
Clear.
Gross NPA is calculated as total NPA to total advance into 100. So by percent, to calculate percentage, you have to multiply by 100. Clear? Okay. Now, another thing is coming as net NPA. So what is net NPA? Net NPA means from gross NPA, some of the amounts to be deducted. So you have to deduct some amount from gross NPA to get the net NPA. And similarly, the net NPA percentage is calculated as net NPA amount divided by net advance amount into 100. So here, instead of gross NPA or total NPA to total advance, it becomes net NPA to net advance. Remember this. So now I will tell you how to arrive at net NPA and how to arrive at net advances. Simple thing, from gross NPA, some things are excluded. So X is excluded, so it becomes net NPA. Same thing, from the total advance, when this X will be deducted, it becomes net advance. So you have to divide this net NPA with net advances. So what is this X? I will tell you. So what is this X? Which are the X amount to be deducted from gross NPA or gross advances, or total NPA and total advance to arrive at net NPA and net advances. Okay. So first thing is, you write it down. Any subsidy amount which have been received by the bank on account of a loan account which has not been adjusted into the loan account. Means it is pending in a nominal account or suspense account. We have kept it, but it is not adjusted to the loan account. Clear? Subsidy amount. If subsidy amount has not been adjusted to the loan account, then that amount has to be deducted. Number one. Any doubt on this? No?
No, sir.
Similarly, any claim you have received from DICGC or ECGC or CGTMSC, whatever the government agency claim has been lodged, it has received. Again, this claim amount has not been credited to the loan account. it is also kept separately in nominal account, or it has to be pending for adjustment. If such things are there, again that has to be also deducted. Third thing, any part payment or anything which is recovered from the borrower and kept in separate account and it has still not adjusted to the loan account, that has to be also deducted. And fourth one is the provision made for that NPA account. If any provision is already there, then that has to be also deducted. So these four together consist X. So X means it is 4. So in question, if any of the things is given, then you have to take that only. You see whether all the things which are given falling under all the category or one of the thing is there. So normally provision will be always there. Provision is always, NPA means provision is always there. These are some account, this might be there. So you will see in the question whether such things are given. If it's given, then you have to deduct that. Otherwise, just deduct the provisions from the gross NPA and deduct the provision from total advance. So you'll get net NPA to net advance. Then you net NPA percentage equal to net NPA minus net advance into 100. Clear? Any doubt on this?
No, sir.
No doubt? Okay. So now you do this question. Please do this question. Then we'll go to the last slide so that it will be completed. Total advance 1 lakh. Total NPA is 8,700. Provision on NPA is 3,300. Find out what is the gross NPA percentage and net NPA percentage.
Gross NPA 8.7.
Okay.
8.7.
Okay, very good. 8.7. Correct.
5.4.
5.4. Do it again.
8,700 minus 3,300.
5.4.
5,400 divided by 1.
But you are not calculating net advance. You are taking the total advance.
55%.
Sir, net advance, you are not told that net advance.
5.58.
Yes, 5.4. Very good. 5.58 is the correct. Net advance, same thing. Whatever X is there, that has to be deducted from total advance.
Okay.
I told you, na, same thing to be deducted.
Okay.
From NPA, you have to deduct that X, and from advance also same X. Okay. So, how you got it? Say total NPA is 8,700 and total advance is 1 lakh. Okay, 1 lakh. So gross NPA is just multiplied by 100. What will be the gross NPA? So it becomes how much? 8.70.
8.7.
So this is gross NPA. Now for net NPA, we have to find out first what is the net NPA amount. So net NPA amount, here only adjustment will be provision on NPA. So net NPA is gross NPA is 8,700 and minus 3,300. So it is becoming 5,400. Okay. So this is our net NPA. Now what is the net advance? Net advance will be 1 lakh minus 3,300. So it becomes 96,700. So net NPA percentage equal to 5,400 into 100 divided by 96,700. So it becomes 5.58.
5.58.
Okay.
Okay.
Any doubt, anybody?
No, sir.
Okay.
No.
Now last scene of the balance sheet management, there is another thing which is called provisioning or provision coverage ratio. Provisioning coverage ratios, that is called PCR. PCR is essentially the ratio between total amount of NPA provision amount, NPA provision amount. This is the gross total NPA provision amount to gross NPA amount. Gross NPA amount into 100. Okay. Means whatever the amount of provision you have made for total NPA divided by gross NPA. Means for this much of NPA, how much provision you have made. So if you go to the last question, gross NPA amount was 8,700. And what is the NPA provision amount? 3,300. So what is the PCR here?
That is 37.93.
So this is the percentage of provision coverage ratio for this one. Okay. But that means how much provision you are keeping for the total amount of NPA. So that ratio is called provision coverage ratio. Is it okay? Do you understand this?
Yes, sir.
Yes, sir.
Total NPA 100, provision is say 14. That means what is the provision coverage ratio? 14%? 14%. So how much provision you have made for the total amount of NPA, not advance. Okay. This is the NPA amount. This is the provision on NPA amount. So what is that ratio? So we have calculated that for this last question, it is 37.95. But RBI says that minimum provision coverage ratio for all banks should not be less than 70%. You have to maintain. So this has started from September 2010 onwards. So every bank should maintain a provision coverage ratio of 70%. Means if your NPA is 100 rupees, then minimum provision you should have 70 rupees. This is the RBI direction. This much you have to. So if a provision coverage ratio question comes, then you can easily calculate what is the provision coverage ratio, that is equal to NPA provision amount divided by total NPA amount multiplied by 100. And RBI says it should not be less than 70%. So such type of question will come. Okay. So this completes our balance sheet management, everything completed. So,
sir,
yeah.
In this case, we have the 37% provision for this issue. Then
okay, 47, 37 what? That is the example I have given. I have given an example only. What is your question? You tell me. What is your question?
I want to know if the provision coverage ratio is less than the as prescribed by RBI, then we have to make the additional provision or what to do?
Yes, you have to cover up that. You have to see what happens. Suppose a bank is established. Suppose a bank is a bank has been established for the last 2 years only. 2 years. So for 2 year younger bank, it might not be possible to have a 70% provision coverage ratio. But a bank which is still there more than 10 years or 100 years, they definitely have a 70% coverage ratio. You calculate 70% is to be there. So if it is less, means RBI says you have to make the provision. Why it is less? It should not be less. That means you are at risk. 70% is the coverage. If you keep, then you are safe. You will not be at loss. Any other question?
Sir?
So you have come.
So you have given this provisioning norms, and that is the percentage that we'll use for normal calculation. I was confused with page number 553. The Central Repository of Information on Large Credits, they have given about...
Yes. Okay. So for corporate accounts above 5 crores, Normally, in such cases, if the account become SMA 0, SMA 1, or SMA 2, this has to be reported to RBI immediately. If you are not reporting those things to RBI, you are hiding this, then RBI says you have to apply accelerated provisioning to be applicable for such accounts, even if they are not NPA. So accelerated provisioning for large corporate account which are more than 5 crore. So their status to be reported to CRILIC. Actually, that is CRILIC. So this has to be reported online to CRILIC. If you are not reporting, so RBI is monitoring that. So RBI says, if at all we found that you have not reported, but they are under the SMA 0 or 1 or 2, then accelerated provision rating will be applicable. So that provision rates are totally different. So you can see that provision rate, that is only X. So those are not for NPA account.
Okay, done, sir. Thank you so much.
Anything else?
So we may need another class for numericals.
See, you ask IBS, I'm there. You tell them, see, normally what happens, normally within this time, I normally cover the numericals both. So 1.5 hours for risk management and 1.5 hours for this balance sheet management. But I don't know why I could not, because lot of time, lot of questions came and it is not possible to cover. So you may request IBS, tell them that we want numerical class. So another 3 hours class minimum if you can give. So 1.5 hours for risk management and 1.5 hours for balance sheet management. So within this, I can at least discuss 20 to 25 questions each. So important questions I will discuss, a simple question I will not discuss. So I will do that, question will be there. I will be doing all the things myself so that you can also do with me. So it will be easier for you. So if you request, then I can take the class. I don't have any problem. You
Sunday will be to ideal time now, sir.
Any day. I am fine with Sunday also, no problem. But not in the morning session. 5:30 session, I am not ready. Say morning session batch, they have to come to the evening session or day session, whatever it is. In the morning, it will be not comfortable for me to do all this numerical. It is better in a daytime or evening time.
Friday, Saturday, evenings.
Yes, Nijan, then provision amount is to be the capital provision, everything comes from the profit only. Whether it is operating profit or non-operating profit, whatever. If you have a profit from P&L account only, you will take the provision.
Sir, PPT will provide it, sir.
General.
Once it is finished, sir. PPT, sir.
No, what is your name? Biswajit, na?
Yes, sir.
If you send me money, then I will send it to you.
Sir, I have already sent, sir.
To me, you have sent to IBS. To me, you have not sent.
IBS, sir, IBS.
So you ask IBS, na PPT. Why you are asking me? If you are asking me, then I will be asking for money. You give money, I will sell my PPT.
Sir, we are ready to give money, sir.
Sir, one general question, sir.
Now, risk management PPT you have received, Biswajit? Biswajit, have you received risk management PPT of mine?
No, sir.
Yes or no?
Yes, sir.
Yes, sir. It was shared in the group.
So when it was shared?
It's already
After completion of next year.
After completion of risk management, I have sent it. Okay. So when this balance sheet management was completed? Today. So I will send it tomorrow. So if you want to tonight, you send money. At least $1 million you send, I will send tonight. Otherwise, it will be available tomorrow free. Whichever is applicable. Okay. Any other question?
Sir, if you posted in this group regarding this class, can we get that, sir?
One minute, one by one.
I mean
So
numerical class, sir. If we posted, I mean we want some numerical class.
Yes, you please, you talk to Biju or Sajesh, or you talk to Mohan sir or Satish sir, or you request in the group also. That is possible because they will be definitely alerting it. If you want it, they will be alerted because.
Okay, sir. We will, sir. Thank you. Thank you.
I wish to give some classes of you for problems.
No, you ask, they will give it definitely because within this time it was not possible. See, today also it is half an hour extended. They will pay me for 1.5 hour only, but I have taken 2 hours class. So I am ready to take class. So don't worry about that. You just request them so that they will alert one day where 3 hours class will be the 1.5 hours I will take for risk management problem, and 1.5 hours I will take for balancing. In a stretch 3 hours we can do, in between 15 minutes break also we can do on Sunday. Sunday or any holiday.
Sunday evening it will be fine. Sunday evening.
अरे संडे इवनिंग क्रिकेट मैच होगा तो मैं नहीं करूंगा. क्रिकेट मैच होता है तो मैं नहीं करता. Okay. I have to see whether cricket is there or not. So on cricket match days, I will not take any classes. I will see that this now World Cup is coming, T20. So if India's or anybody's match is there, I will not take. I will see that the day match is not there, on that day we'll do. Okay?
Tomorrow evening, sir. Friday evenings.
If it is allowed by IBS.
We will request.
IBS, itna jaldi kar dega IBS. You just see. See, normally 2 batches are there. So evening batch and morning batch are there. They have to be together again. Na? So at least 1 day or 2 days time will be there. So let's see. Let's see when it will be applicable. I will see and tell. So exam which is far away. After 1 week also we can do that. There is no problem. So that during this period you can prepare yourself.
Okay, sir. Thank you, sir.
Okay, so by next Sunday you can do, because other course classes might be there. Let them be completed, then we can have this numerical class. Aram se, relaxing way we'll do, so that it will be good for you. Okay. Chalo, good night.
Those who have got the
Thank you,
PPT,
sir.
please
Good night,
reshare in the group. Those who have got the PPT, I have missed on that. Please reshare in the group, please.
Which one you are asking? Risk management?
Yes, sir. Anybody who has got it can please reshare.
Yes, so everybody has got it, so they will share it. Don't worry. And tomorrow by evening you will get this balanced management.
Yes, sir. Thank you so much, sir. Thank you, sir. Good night, sir.
Good night. Good night.
Thank you, sir. Good night.
Good
Thank
night.
you, sir.
Thank you, sir.
Good night, all.
Good night.